This is Doug Green, and I'm the publisher of Technology Reseller News, and I'm very pleased to have with us again Spencer Lee of Telin. Spencer, thank you for joining us today.
Hi, Doug. Thank you for having me.
And I'm very pleased to introduce to everybody Melissa Widner of Lighter Capital. Melissa, thank you for joining us today.
Thanks for having me, Doug.
So just a little under 2 months ago, Telin and Lighter Capital joined forces to empower businesses and growth in our market and to specifically cater to the Telin partner community. And so we decided to have this podcast to learn more about that relationship. And Melissa, tell us a little bit about what Lighter Capital does.
So Lighter Capital is the pioneer in revenue-based financing for B2B SaaS companies. We have been providing non-dilutive funding to B2B SaaS companies since 2010. And what that means is we provide funding. We don't take any equity. It's funding that's in the form of a loan. And the companies will pay us back a percentage of their revenue until the loan is paid off. So they pay a fixed amount at the end of the day, but the amount they pay every month varies based on their cash collected revenue. So it's really a friendly loan in that, if you have a big collections month, you're paying more of your loan down. And if you have no collections, you might not be paying anything that month. So we are an alternative to raising dilutive equity for companies that need growth capital.
So wait, this sounds very interesting to me. Let me start with something I think I heard at the beginning of your description. I think a lot of our listeners, especially in the MSP community, have had the experience of signing away house and pets and cars and socks and so on as collateral, anything you can dig up, right? Because our traditional lenders basically want to have hard assets. But it sounds like you guys lend money on a very different basis.
Yeah, we're looking at the revenue and looking at the company's ability to pay us back based on what their forecasted revenue will be. So in the case of, well, actually Telin's one of our clients, and we have funded Telin with growth capital, and it's been great to be on their journey and see how much they've been able to grow since we've been with them. But in the case of MSPs, a lot of times they don't have places to turn other than banks, and banks won't necessarily lend them money unless they have an asset or a personal guarantee. But MSPs have recurring predictable revenue. So we can provide them with funding to grow their business without taking control. We don't take board seats, we don't take any equity or warrants, and again, without taking equity, so they don't have to give away part of their company.
Now, the other interesting thing that I heard there was that you live with the customer in his seasonality. That as we all know, it is a little bit of a seasonal business. There are seasons that you have high receipts and low receipts and so on. And you guys actually have that loan live with that.
Yeah, it's the payment. We have two products. One is a traditional loan where it's a fixed amount every month, and some customers opt for that. But our more common product is our revenue-based financing, which is the payment is a fixed percentage of revenue. So it might be 5% of cash collected revenue until the loan is paid off. So in a really low collections month, and a lot of our customers do have very seasonal collections. We have ed tech companies, and they might collect twice a year is when they're primarily invoicing. So in those low collections month, they don't have a high loan to service.
And Spencer, it's interesting. You guys actually started out as a customer before you exposed your clients to this organization.
We did, and I think that is what really makes us so comfortable working with Lighter, because we've got years of experience. We've worked together, as we've grown, on a few different tranches that we've received from them, and we've got to be able to see from kind of A to Z, how that works when you go back and you've scaled your company, and you need another extension, you need an addition to that that loan amount, how easy that then and seamless the Lighter team makes it. We've joined them at their annual event, so always a great group of people to work with. So, it was this past year. I was sitting down with Melissa. And I said, you know what, this makes a lot of sense for our partners too. Like our partners are in the same situation where they're growing fast. They're heavily on a subscription service business model. They don't have heavy assets that are weighing them down, and they need growth capital. And I've talked to some of our partners of saying they're maybe looking to go raise out VC money, but that doesn't always make it works in some circumstances, and it doesn't work in others. And I think in the case where you're growing your revenue on a very predictable basis, and I think telephony is it's very predictable, and it's one of those industries where your end customer is always going to pay you because it's one of those requirements to do business in a lot of cases. And as they grow, they need to. Lighter's offer makes a lot of sense because they can, rather than going out and say getting $1 million or $2 million in VC money, they can build up the debt as they scale. And if you span that over a couple of years, you can still get to the same point in terms of the same capital that you want, but you don't have to give any of your business away. And what I found about the Lighter team is they're always trying to help in every way, whether it's putting on monthly CEO groups, doing the annual convention that they put on. It's always about how they can help you grow, because hopefully, if Melissa, I think the name of your game is if you guys can help your clients grow, then ultimately they'll stick with you, and you be in for the long haul.
Yeah, and I just want to build on Spencer's point. I think one of the reasons we're so excited about the partnership with Telin is because we really view our customers in the same way Lighter Capital does as Telin does, where Telin provides them with the service, but they provide them with so much more, because you're joining a community and you're joining a place where you can learn about how to build an MSP business, not just from Telin, but from other MSPs. And with Lighter Capital, it's similar. We provide companies with funding to grow their business, but then we also provide them with the community of where they can learn from other CEOs. And we believe that the best thing you can do for an entrepreneur is get them in front of other entrepreneurs, and probably any problem they're struggling with is one that someone in our community has solved before.
Melissa, with a lot of financing sources and resources, the process can be so daunting. Many people may not even bother.
Yeah. It's I was an entrepreneur. I ran 2 companies that both had successful exits, and then I became a VC for a long time. And pitching to VCs or trying to get money from a bank is a really long and difficult process. And pitching to VCs, especially, is a black hole. You could spend months and months, even years, and not be successful. With our process, it's very straightforward. The application takes 10 to 15 minutes if you're a slow typer. We look at the data of the company to look at revenues. We're looking at the bank account information, the accounting platform information, and billing information, and we make our credit decisioning that way. It's very fast, very straightforward. And if companies don't qualify, we'll tell them exactly why. So there's not a black hole. They might not have enough revenue. We need a minimum of $200,000 in recurring revenue a year. They might not have enough customer diversity. We can't fund companies whose the majority of their revenue is with one customer. But it's a very straightforward, clean process that doesn't take a lot of the entrepreneur's time.
And I know you mentioned this earlier, but it sounds like also you're not interested in a board seat or a hunk of the company or that type of thing.
Yeah, there's no equity, no control. We basically fund the company and then ask, how can we help? Companies are typically taking our money for growth capital to hire another salesperson to, in order to build their sales, maybe create a new product. So we provide them with the funding and then ask how else can we help. And a lot of time that help takes place in the way of introductions, joining our CEO community, sometimes introductions to customers. But it's very different than taking money from somebody that's going to sit on your board and maybe have some control in your company.
Yeah, Spencer, can you give us a sense of how this actually would be applied? How can this financing come and help an MSP do something?
That's a good question. And I think I've got a couple of good examples of some people that, I've talked to is, okay, let's say, for example, you're an MSP and, or you're a telephony company and you did an RFP for a large school district, or, a national chain, of, retail locations, where you've basically won a conceptual deal, but that deal will then take place over installations that may be drawn out between 12 and 36 months, where you have to hit all the markers. Well, in that circumstance, your business has theoretically grown, significantly, because, I'll just use the example of, multi retail locations, franchises. You have an individual client, at each one of the, say, burger joints, and you're going to install at each one of them, but you don't have the cash today. It's, you're forward looking 36 months where you'll have all the customers, but you need, technical staff, you need installation staff, you need more salespeople to make sure that the other sides of your business can still grow. And this is a perfect lending model because, as Melissa mentioned before, you can't go to a bank and say, hey, I need to hire 3 more staff, and I don't have a massive warehouse or facility I can use. But I've got this revenue of my current business, and I'm going to be, building on to that. Maybe, it's a significant increase by these franchise locations, but it allows you an injection of capital to be able to satisfy that new project that you've won, that maybe that's an RFP that you've won, without having to. I've seen a lot of companies do this. They can't raise the capital and they just try to do it with the staff they have. They burn staff out, the staff leave. Maybe they lose that contract as a whole. And worst case scenario, they lose the existing customers because they weren't paying attention to them in the meantime. And, it's a challenging problem that a lot of, our partners are dealing with is, when those big opportunities come, how do you handle them effectively? And being able to make sure that you're, managing your current customers, but able to, get those contracts done. So I think that's example, in that type of company, in that type of situation that I mentioned, in regards to, a large franchise RFP that you've won, is a great example of how, MSPs can utilize the lighter capital and their lending model.
So Melissa, once when someone starts in with you guys, it sounds like right from the beginning, it's integrated into what Telin is doing and also what you're doing. There's assistance and help available.
Yeah, absolutely. We talked about the help on the community side. We also have, because we're integrated into the accounting platform and the banking platform, we can provide data back to the company on what's going on, for the company to see what's going on. And companies know what's going on in their own business, but we have nice charts and graphs that they can use as well.
And Spencer, it's integrated into your MSP portal?
Yeah, the Lighter Capital is fully integrated into the one console. So if you are a partner of Telin, just navigate to the Lighter Capital tab. It's all the relevant questions that you need to fill out in order to submit an application for review with Lighter Capital. Once you do that, it kicks it over to the Lighter Capital team, lets them know that you're a Telin customer. So it's a little quicker to get your pre-screening done, and then they'll one account manager will from their end will be in contact with you.
So Melissa, I really want to thank you for joining me today. This has been really interesting. Where can we learn more about Lighter Capital?
At lightercapital.com. That's LIGHTER capital, CAPITAL.com.
And where can we learn more about this program?
If you want to learn more about Telin or Telin's relationship and how it relates to Lighter Capital, reach out to us, www.telin.com. You'll be able to connect with one of our account managers who can definitely discuss in more detail with you.
And again, it's already on the portal if you're already a partner. Is that right?
It is. It's already integrated. So if you are a current Telin partner, navigate to the One Console and you'll find the Lighter Capital tab.
And it sounds like also you can reach out to the Talon team to get advice on this as well.
100%. They're all familiar with the Lighter Capital product and offering. So if you guys got any related questions on how it may relate specifically to your MSP business, yeah, our team can definitely try to answer some of those before sending them along, obviously, to the Lighter Capital account management team.
Well, Melissa and Spencer, thank you for joining me today. This has been very interesting. I hope we get to do a follow-up podcast in the months ahead to see how this is going. But for now, thanks very much.
That'd be great. Thanks, Doug.
Thank you very much. Thank you, guys.